Welcome to the StockMatter.com studios here in the Black Hills of South Dakota. I'm your StockMatter Brian Johnson, and a time to catch you up video. All right, we had since the week started. Let me see if I can remember what happened yesterday. Okay, not much. We went straight sideways. Just kind of a sideways consolidation, was a triangle. Now, today we had some very violent action. Remember, options expiration week. If you have followed me at all, you know how I am about options expiration week. Usually drop your position size, use really good risk management. This tends to be a pretty volatile time in the markets. Now, it's only added by the earnings season. That adds all kinds of extra volatility. And now we've got all kinds of economic data coming out, and Beige Book tomorrow, and blah, blah, blah. Has been a lot of information being thrown at the markets over the last, well, I should say the first couple days of the week. Expect that to continue. Expect the volatility to continue. And so you must play carefully. Do not get into a trade this week without having a stop in place. If you get stopped out, oh well. I know it's kind of upsetting. I know it ticks you off, but you know what? It's better than getting buried by like some of the stuff we saw today. We saw a hard push down to begin the day, which was odd because I figured, all right, we have housing numbers coming out. The housing market, by the way, has been one of the few shining lights in the market. Its data has been fine. I would say bordering on great, actually. So I thought, based on what we've seen, I would expect the housing data to be fine. It was great. It was great, and the market tumbled straight down. All right. So anyway, you get into a trade thinking, "Oh, here we go. We're dropping, boy. Woo! Wow, look at this." And it was moving hard. Even in the trading room, we were starting to ask, "Well, maybe this is going to be a little deeper than we thought," type stuff. And as it turns out, what do we see? It hit a bottom. You can see it bounce right off some perfect support right there. Okay, so on the 60-minute chart, it hit that 200 perfectly. And the bulls grind it back up. They didn't do anything spectacular with it. It wasn't necessarily a super hard push up, but it was certainly sharp enough where after 60 minutes we had all but reclaimed what we had lost the previous 60 minutes and made for a very nice kind of a V bottom type look. If you look at a 2-minute chart, you'll understand what I'm talking about. So it was a very, the bulls brought it right back up. Now we've seen this in the past, and it typically is a bit more bullish than bearish. The market drives down and the bulls grind it back up. Then we get sometimes some really bad economic data out. Oh, the market's crashed. And by the end of the day, the bulls grind it back up. We've seen this in the past quite a bit. Maybe that's where we're going now. I'm not going to say at this point, oh, that's definitely where we're at. I'm not going to go out on a limb yet because we've only had like a day or two of it where we've seen that. I've seen that over the past week or so. However, have to take note of that. I mean, we were on our way. The bears had it. They just needed just a little bit more help there, and they were on their way. And the bulls were like, no, I don't think so. And right back up to finish positive for the day. So overall, you can see us hanging out above this overhead area, that 12.8 area, something I talked about. Maybe we don't. I'm looking for confirmation. I need some confirmation. Yes, this is an inverse head and shoulders. No, I don't want you to focus on it. I'm not going to figure out targets. I'm not going to expect to hit a target at this point. We're going to wait and see what we get the rest of the week. We'll talk targets after we blow away 13,000. But until then, I ain't worried about it. Okay, don't talk. This inverse head and shoulders right here doesn't even interest me. I don't even like it. So just be careful with it. We saw a head and shoulders over here that failed. We see an inverse head and shoulders over here that will succeed. We don't know. We don't know yet. So you want to wait, give it a day to see if we can push up and through these areas. Now, from the Dow and the SPX, it looks good. It looks bullish. Let's go on to the daily, and you can see here where we kind of pushed our way up and above these areas. We got up and above last Friday, huge push to the upside, buried the 50 and the 20, held it Monday, raced below it, and not only held it today, but pushed up and above all these overhead levels. So things looking pretty good, bullish so far. You got to give the tint to the bulls at this point. They're doing a very fine job. We get more housing data in the morning. Why not expect it to be good? I mean, hello, it's all been good. So I would just expect it to be good. Now, how the market digests it is a completely different story. But The point is, the data I would suspect will be good. So we're looking for confirmation back up and above these areas. Really, you want to focus on these 12,9, 13,000 type areas. That's when maybe we can start to really get a little bit more bullish on the move. But until then, let's just call it a good day for the bulls and leave it at that. Lots of volatility in the options expiration. We could race up only to have Beige Book come out tomorrow, which is 2 Eastern, by the way, and have the thing just go, yeah, he didn't say anything good, and race right back down again. So it's a crapshoot. Anyway, watch for these overhead areas. Still good opportunities to go long. We'll see if the market can prove it. So I'm not saying don't go long. I'm just saying be cautious if you do, until we know for sure what's going on. Now, the NASDAQ was a different story. Race back below this blue line, back above the blue line. We never got into these overhead areas. I really like it back above here. You want to wait till you see it break 2630 before really you kind of make a move on it. Overhead up here, lower down here. Take a look at the daily, though. Notice how we did not blow up and through like we did the other indices. This one was able to, it got trapped last Friday in between the 20 and the 50. It stayed there very nicely on Monday. And then today, look, we did manage to break the 20 and stay above the 20, but it's not convincing. I mean, we're right on that line. You can split hairs with it all you want, but the truth is we're barely above it. So we're still looking, once again, for confirmation come the morning. Now, I don't think there's anything major coming out necessarily except for housing data, and that's before the market opens. So we should know, or at least have a good idea of maybe how the market's feeling even before it opens. But right now, hanging out very nicely above that 20-day. Got to get that confirmation of those higher areas. This is also staying very well contained between this area here. This weekly is the thing that's got me a little bit on the cautious side from a bull standpoint. But if we can blow away these upper areas, guess what? Game on. Bulls should have it here for a little while longer if they can just get back above this stuff. They've got some work to do. It's got to be back up into this area before I get interested, but that's where you're aiming. Now remember, this looks bullish right now, on and on and on. It's only Tuesday. 3 days left before this candle closes. This could look really good bullish or really good bearish by the end of the week. So we'll let it simmer and talk maybe more about it on Thursday if I do a Thursday video for you. SPX 60, you can see this thing kind of traveling along. Now look, we have an inverse head and shoulders on right here. Do you see it? Shoulder, head, shoulder. Maybe we pull back, get a shoulder. Maybe we've already got the shoulder. All right, look at this. Shoulder, head, maybe we're making a right shoulder. So we can do this all day long. When you get into a consolidation, you just take it for what it is. It's a consolidation. It's all moving sideways. You really want to wait for breaks up here. You want to wait for breaks down here. And it's just as simple as that. Don't get wrapped up in head and shoulders, we're going down. Oh, wait a minute. We're going way up. Inverse head and shoulders, we're going up. Well, wait a minute. Now there's a head here with shoulder and you know what I mean? You can get wrapped up in that too much. Don't worry about it. Let it play itself out. The markets will tell you which way to go. Got to break these larger areas, and then you'll know. So here we are, still looking very nice, still looking very bullish necessarily from an SPX. Look at the daily. Strong candle to the upside today. Good volume. The internals were only okay. They weren't spectacular, but the volume was there. Everything looked fine. We were up 10 points. We gapped up 5 to start. Ran all the way back down to the 45 area. Ran all the way back up. So huge moves today from an intraday perspective. But what we're really focused on here is, what is it? Confirmation. That's right, confirmation. We're just looking for this thing to get back up and over these areas. If we can get back up, then let's just keep it going. But take note, in this case, most of the indices are in the same boat, of this very well defined channel that we're watching. So breaks up and into this area, you got to be looking at this upper channel line. That could be very telling going forward. Okay, as it is, I am just going to wait. This could also triangle in through here. We don't know yet. There's 100 different ways this thing could go, and that's why I'm just pressing hard on the whole wait for confirmation thing, because it's still, there's nothing for certain here. Now, I have to give the advantage to the bulls. The Dow looks good. The SPX looked good. The NASDAQ looked fine. I mean, it held, but it hasn't pushed above its overhead levels. We'll wait for that. Maybe it'll happen tomorrow. And we are coming into kind of the meat of the earnings season now. Over the next week or two, we should see the big dogs report. We'll see Google and Apple and those type of things, and that could be real market movers then. So we'll let this thing wander itself sideways. Just as I said, watch for the more major breaks. VIX way down. Down 4% or so today. Back into the 16, definitely. Guys, listen, for the last since July easily, we've been in a very complacent mode here. The market really isn't all that spooked. Seems to be pretty content with what's going on in the market right now and in no real big hurry to run this thing down. So for you bears out there, chill. Okay? It's not time yet. There will come a time. All right? But it's not right now. So watch the rest of the week. If the bulls continue to confirm, don't get too antsy about, oh, I'm going to go short here, and then bury yourself. Okay, don't get caught up in that. If this ends up being a major move upwards, you're going to get your hand slapped. Make sure you wait for the confirmation on the downside move. If you do, you'll be rewarded. It'll be much easier, less risk, save your money, on and on and on. If you choose to just guess at when to go short the market because you think the market's up too far, which there is no such thing, by the way, you're going to get, you will probably in most cases get buried. You know, that whole catching a falling knife thing, it's just not worth it. It's just not. So we're looking for moves maybe back down into here. Now, if we can get into these lower extremes, okay, now we have a reason to start thinking bearish. Okay, looking for a reversal type thing. But until then, look, it's just wandering around in complacency mode. This thing can do this for months. Months. Just keep in mind, below 20 for me, complacent. Weekly doing the same thing, staying very low and doing a nice job of it. FAS, remember this little falling wedge I showed you, which I said was textbook? Guess what? Textbook. How pretty was this? The break up and through above that 87 area. Yeah, baby. That's a free one from me to you because I love you guys. All right? So if you were in this thing, if you were following along back above that 87-ish area or 88, 89, whatever, should have made you a little bit of money on this. You could have pulled a little bit out of this thing, and it's still wanting to push a little bit to the upside. Now, whether this thing will consolidate or go next, I don't know. To be honest, I really have nothing to do with it right now. The information in front of me doesn't give me anything solid to really work off of. So in FAS and FAZ right now today, I don't have anything for you. The break was here. This was just the most cherry falling wedge you're ever going to see. If you've ever wanted to know what a falling wedge looked like or looking for examples, print out a 60-minute FAS chart, draw it in, and put it in your notebook because it doesn't get much prettier than this. And this was gorgeous. Just anyway, sorry. I love it. Anyway, I love it when it all works. Isn't it nice? Technical analysis is just a beautiful thing. Okay, daily perspective here. We're still wandering in the same kind of up channel, though. 60 minutes showed us a brilliant break to take to the long side. However, bigger picture, daily, we're just wandering around in that channel. Just look at an SPX chart. It's the same thing. So we're waiting for those more major moves before we make that big decision. I'm not going to give you anything on FAS. I'm not going to give you anything on FAZ. But look, same type of thing. Break these levels and get back below this 23 area. Bombs away. This was another great trade. So a buck or so into it. Keep in mind it's a $20 stock, so it's not going to move like FAS does, but it's still, I mean, you make $1 on a $20 stock, that's pretty good movement there. And it continues to fall, continues to drift away. You know, 2150, who knows if it'll break that, it's probably in for a little bit more bearish action. I'm not going to give you anything. I'm not going to say, okay, below here, above here. I don't have anything for you right now. Let's wait till Thursday. If I do one on Thursday, I'll update you with it. But right now, It made its break. Now this one, remember I talked about it being maybe a fractal, if you will. It was just kind of repeating what it did over here, push up, repeating what it did over here. We didn't get the same type of break yet. Okay, you could look at this little move up and then down and then up and then back down, and you could kind of repeat that over here, and maybe it is the exact same thing. It sure looks awful similar, doesn't it? So I'm not going to erase these lines because we don't know if they've been invalidated yet. So still looking for the potential for this action and a break to be followed by this action and a break. See how nice that is? You don't get this very often either, but when you see it, it's really pretty cool. I mean, just like a little baby channel forming over here. So we'll see if that actually plays itself out in the same way that this did. And if it does, once again, you should be in for some really, really nice profits. But there's nothing to even talk. I'm not even talking about this until we get back above the 20-day moving average. So once again, we'll wait till Thursday and see if we can update you then. All right, that'll do it for today's video, guys. Big consolidation. 950, 450. Hello. It's on every one of the charts. Just sitting around waiting for the bigger moves to happen, when and if they do. But that's where you're at. That's your position right now. That's where you should be staying, just waiting for those bigger moves to happen. Yes, we had a nice move today by the bulls. Yes, I guess I have to lean that way because, look, we had a push down, and the bulls went, nah, not on my watch. Things are breaking up and over. We'll just wait and see if we get any confirmation from that tomorrow. So there you have it. See you again on maybe Thursday. If I get time, I'll do one for you Thursday. See you later. Bye.